My guest this evening is Marvin Blum, founding partner at the Blum Firm. They've been around for over 3 decades, and they have a lot of areas of specialty, but in particular, we're talking tonight about business succession planning. Marvin, again, thank you for joining me here on Mind Your Business.
Thanks for having me.
Now, family businesses are often the glue that keeps families together. Do you have any tips on how to keep them together, especially when the founder passes on?
Yeah, I was listening to a speech by one of the gurus in this area. His name was Dennis Jaffe. And Dennis said how important it is for the Generation 1, the matriarch and patriarch, to leave behind a legacy letter or a love letter addressed to future generations. And in this case, he read a letter written by the matriarch of a family. And I'll tell you, the women in this case are very powerful here because they are very often the glue in the family. And this was a woman who wrote a letter to her future generations, and she said, I want this to be read every year at a family retreat. And it's going to be read in times to come to people who never even met her. But basically, she said, your ancestor, my husband, made this family very well off. He worked hard, and we created this very successful family business. And it's a very important asset to us. But she says to them, there are pitfalls inherent in having a family business. Be vigilant for the warning signs. And here's the powerful language. I would rather you dismantle our family business than squabble over it. Now, I think that's powerful because a lot of times people need permission from the matriarch and patriarch to say, you know what, this is tearing us apart. Let's sell this business and let's live together peacefully. And that's what she's telling them. Even though it is part of our lifeblood here, I want you to never let it get to the point of tearing you apart. And so we've created a trust in our firm. I call it FAST, F-A-S-T. Stands for Family Advancement Sustainability Trust. And this is a trust vehicle that I don't hear anyone else talking about, but it is an idea that came to me, and it is to park some assets in a trust and use those assets to pay for family education, preparing heirs, having family retreats, we do an annual Passover getaway trip with our family. It would be to continue doing Passover getaways, for example. And
that's real glue.
It would
real
glue, and it will provide the money to pay for it, because my experience is that the kids are not necessarily going to want to pay for those things after mom and dad are gone. So this will provide the money, and it also designates somebody in charge of this trust who's paid to make sure that these retreats happen and all of this good stuff happens. So I'm a believer in setting aside a pocket of money. You can fund it with life insurance, but it's dedicated to keeping the family glued together.
Smart. Now, Marvin, I understand that you're a big fan of Warren Buffett and actually attend the Berkshire Hathaway annual meetings in Omaha. Talk about it.
No, it is a real convention of cronies like me who worship at the altar of Warren Buffett. But I will tell you, I had the opportunity to ask him twice now. I've had the opportunity to ask him a question at the meeting. And you've got 50,000 people listening to you. It's very intimidating. Right. But anyway, once I asked him about his estate plan and how you can leave money to kids without ruining them. And he said, first of all, he's famous for saying you leave them enough so they can do anything, but not so much that they can do nothing. Okay? But he said it's not so much the amount. He said it's more they're looking to you as an example. And if you want your kids not to be ruined by money, then you have to live in such a way that they follow your example. I thought that was very powerful.
Yeah. And in fact, even the New York Times piece that did come up, that concept about making sure that you're also preparing the children. In fact, it was discussed in here that the rules of communication, for the wealthiest families, the goal is to keep the family together and as an economic entity for generations, etc.
And he requires all his managers to submit to him a letter every 2 years designating who he calls if that manager doesn't wake up one day. Who's going to be running your company if you're gone? So he's a big believer in succession planning. So
and he has that in the contract.
He does. And here's to Warren Buffett. Follow the lead.
Does he have any other advice offhand on business transition planning?
The other thing I talked to him about was philanthropy. And he's a big believer that, when you build an empire like most people that work all their lives and have dedicated themselves to this business and have created, he said, there comes a time when your kids have enough. and really think about helping others and the role of philanthropy. And if selling a company is an ideal time that I have found that people can make a nice charitable gift, because this is the first time in their life they've become liquid. But I want to point out, if you make the gift before you sign the contract, so I want to give away 10%. Before you sign the sales contract, I give 10% of my business to a charity, and then you sign the sales contract and sell the company. You're going to end up in the same place as you would have at the end of the day, but you would have saved 10% of your capital gain tax, because of the order of events. If you gave it away before you sign the contract versus if you wait till after you close and give them a check. So just changing the order of doing it can save 10%. So in a case a company sells for $10 million and you want to make $1 million gift, making it in the right order will save $238,000 of tax. Just do it in the right order. But if you've already sold the business, it's too late. Call an advisor before you enter into the sales contract.
Any words of wisdom that you can share with us for someone who's about to embark on the process of business transition planning?
Well, the number one is just get started. Don't wait. And the number two, this is brief, is don't look for perfection. You will never find the perfect solution. And perfection is our enemy here. So get something in place, even if imperfect, and you can tweak it later, but get something down. Something's better than nothing.
Marvin, as we bring it to a close, any final thoughts that you could share with the listeners of Mind Your Business?
Just, if you love your family, then take care of them.
And who doesn't?
And who doesn't, take care of them. This is an important part of loving your family.
So, and again, if someone wants to get in touch with you, how can they do that?
www.theblumfirm.com.
I love the honor of interviewing C-level executives and sharing their great advice and perspective on Mind Your Business. I'd love to get your feedback. Post it in the comments below and subscribe. You'll never miss an edition of Mind Your Business.